Hi everyone, I have some new scenarios on the high time frame, medium time frame, low time frame and the micro, including potential trading setups, and I will go through all of these, but not as I usually do. A little bit of a different system in this video, so let me know if you like it. The first scenario we're going to take a look at is the very bullish scenario, first starting on the high time frame. So we have then a 5 wave over here in a wave 1, followed by a wave 2, looking for 3 to the upside. Now wave 2 finished around the 0.236 fib time, taken from the low of 1 to the high of 1, which is very rare. Usually it hits at least the 0.382 fib time for a wave 2, and even though wave 2 tends to be shorter than at least a wave 4, this is very actually unusual. So but yeah, in this scenario we are looking for upside, and then eventually we have wave 3 targets, with the minimum target of wave 3 being the 1.618 at about 43.2k, and then it can extend a lot higher, all the way to above at least 100k. But just know that the minimum target is then at least the 1.618, and we expect more upside to come. If price is gonna dip below this second wave, then this scenario is invalidated. If we now go to the medium time frame of this very bullish scenario on the high time frame, so we're basically zooming in a little bit, you can see the yellow count still on the chart, with then a 1 over here and a 2, but then on the medium time frame this over here is another 1 and another 2. So we have a yellow 1 2 followed then by an lower degree count, another 1 2, looking for a 3 to the upside, with the minimum target 39.2k. What I don't necessarily like too much over here is that this wave 2 barely missed out on hitting the 0.382 Fibonacci, taken from the low to the high of 1, which is already a rare target for wave 2. But in this scenario this is the case, and the invalidation is if we would go below this wave 2 for basically this impulse up in a big third wave, with again minimum target 39.2k, which is also actually around the high time frame range point of control, which is quite nice. If we then go to the lower time frames of this very bullish scenario, so everything is still the same, we're just zooming in bit by bit by bit, we again have the green wave 1 and 2 over here, with 2 hitting or almost missing out actually on the 382 hit, and then we have a purple count, which is then another 1 2. So we have another 1 2 hitting the 0.386. Now guys, if the 0.382 is already a rare target for wave 2, you can only imagine that this is insanely crazy and rare, but I've seen it online in some videos, so I was like, yeah, I'll just talk about it at least, but this is incredibly rare for a wave 2. The invalidation is of course dipping below this level at 26.9k, and in this scenario this is a purple 1 2 followed then by a blue 1 2, and we just basically expect to go through all of this without any problems. We're just going to shoot through all the resistance over here, including the high time frame range value area low, and basically fly to the moon. Now the problem that I have then with this scenario, at least on the lower time frames for sure, is the volume. So if we look at the volume, we are basically what the chart is doing is this. And what you want to see in this scenario is actually something like this. You want to see it move to the upside. Volume is dying when we are making new higher highs as well, which is not a bullish sign. So currently this scenario, the very bullish scenario, is a little bit of an alternative scenario, at least on the lower time frames. So this of course can be the low of wave 2, with then wave 1 ending over here, which I will actually show in a second, and then this is a 1 2 and then 3 to the upside. That is still possible, but this scenario, the very bullish on the lower time frame, for me feels very unlikely. Then we go to the micro count of this very bullish scenario, and what I want to show you then over here is then we have the purple 1, purple 2 over here, followed then by a 1 2, a 1 2 and another 1 2, and you just continue with 1 2s before then expecting a massive move to the upside. Now yeah, okay, we have a little bit of a volume spike over here, but as you can see it's actually nothing crazy. We expect a lot bigger moves to the upside. The invalidation of this scenario on the very low time frame is taking this yellow wave 2, if this is going to be then a 1 2. What we're now going to do is zoom out again to the high time frame and share with you the bullish scenario, which is like not as bullish as the very bullish scenario. Please don't get confused, but a different scenario on the high time frame, medium, low and micro time frames. So we have the end of the bull market over here, wave Z ending at its rare target of the 0.618, and now wave 1 is not finished. That is the very big difference between the very bullish and the bullish count, is that wave 1 is not yet finished. In the other scenario, wave 1 is here, 2 is here, but now we're still working on 1, this being the 5th wave. And the resistance here is so nice. The high time frame range, value area low. We have a support resistance area over here. And on the macro, there's a couple of other Fibonacci targets that are in this area over here between 28K and basically 32K. So it's a very nice resistance area where if this then is the end of wave 1 in a 1, 2, 3, 4, 5, we're looking for a short to the downside, entering lettering, of course, risky because of the bullish market structure, moving to the downside for then a wave 2. And what I like about the most common target of a wave 2, which is the golden pocket, but the most common targets are the 0.5 all the way till the 0.786. But most commonly out of these is the golden pocket, is that it has very nice confluence with the low over here that can be taken for extra liquidity for then a nice potential long setup to the upside. And the stop loss clearly is then below Z, because that is just a very clear invalidation. Now, volume wise, what I like about this scenario as well is that if this is a wave 5, you can see the volume is lower than in this wave 3. So there's a nice little bit of volume divergence, I guess you can call it. Just less volume in wave 5, which is also common and what you want to see in a wave 5 compared to a wave 3. Now, if we then zoom into this scenario to a little bit of the lower time frames over here, what we are looking for on the lower time frame is then this being a wave 4, waiting for this wave 5 in green to end the yellow one. And then we have the blue count, then being this a 1, 2, 3, 4, and 5 soon to finish or already finished, and we're at the start of a correction. But in this scenario, we would expect some resistance around the 28 to 32K area, and then eventually move to the downside, or where we are now, eventually moving to the downside for this wave 2. If we then zoom in once more, we get the exact same scenario. So we can basically skip this. I forgot that this was actually basically the same. And then eventually what we can look at on the very low time frames is, I call these bearish scenarios, micro bear 2 over here. It basically means we're now zooming into the final wave, basically wave 5 of then a bigger yellow one. And over here we have then a 1, 2, 3, 4. And then this 5 over here currently is an ending diagonal, which might actually just be finished by the looks of it, if this scenario is true, of course, where this then is a wave 1, 2, 3, hitting the most common target for wave 3 in an ending diagonal. 4, what I don't necessarily like about 4 is that it hit its very rare target, the 786. Of a wave 4 in an ending diagonal. And then we have wave 5, which actually did hit the common targets for wave 5 in an ending diagonal, which is the 0.786 and the 0.886. And the invalidation basically is if price would move to the upside and hit the 1-to-1 of the low of 2 to the high of 3 and then to the low of 4 with the trend-based fib extension. Hitting this level, 28.7K, means this ending diagonal scenario is invalidated. Now in this scenario, then as well, shorts can be laddered, save stop loss somewhere above, and then trading it to the downside for the yellow wave 2, because that is still the scenario that we are in. And if we then have the other bearish scenario, also fitting the yellow wave 1 at the end over here, this is the same, still a 1, 2, 3, 4, 5 in blue, but in this scenario, wave 5 is already finished at the 1.618 taken from the high of 3 to the low of 4, so that is a perfect target for the wave 5. And then now we're in an expanding flat, and this being an A, then this is eventually a 3-wave structure in a blue B. So we have an A, B, and then eventually a C to the downside in an expanding flat. And if I go to the 15 minute, a little bit more clear, 3 waves in the A, then we have a basically a zigzag, a 5, 3, and then a 5-wave ending diagonal in the C for the bigger B, and then move to the downside for a wave C. Most common target for a wave B expanded flat is the 1.236 and the 1.38. Nice confluence with the high time frame range value area low, and also the 1-to-1 is over here, taken from the low of A over here to the high of A to then the low of B. So that is quite nice as well. The invalidation, however, for this scenario, especially with this then being an ending diagonal, is price taking the lows of wave 2 and 27.8K. And now then we go to the bearish scenario. And in the bearish scenario, which is going to be the last thing I'm going to talk about, we have over here on the higher time frames, we have wave X on the macro, looking for then an ABC expanding flat, almost ending once again for a wave 5, because this is still the same. It's still an impulse, but then it's not a wave 1, 2, 3, but it's the end of a wave C, and we expect a move to the downside in 3 waves for wave Y, hitting targets of basically at least 13K, if not lower. In this scenario, we are inside the most common wave C target area over here. We are also inside the most common wave 5 target area, which is the 1.236 and the 1.618, taken from the high of 3 to the low of wave 4. So some nice confluence over here. Is this the end and do we go down? I'm not so sure. Would like a little bit higher, to be honest, to hit the range value area low, but also the target here for wave 5 also has confluence with the target of the macro wave X. Both at about 29.6K, plus we then also hit the support resistance area. So that is quite nice for then a potential short setup, lettering the shorts, save stop loss, trading it to the downside for, in this case then, a very big Y. So basically the bullish and the bearish scenario both mean shorting around the same area. The only difference is the target. For wave 2, the target is here. For Y, it's lower. If we then go to the medium time frame scenario, which then of course is the bearish scenario, as that is the one that is left. We have, let me remove that, the high of wave X, and then also the wave C, which then is a 1, 2, 3, 4, 5 in this final wave, and then we expect a move to the downside. Now what I don't necessarily like too much over here is if we take this as a 3 and this as a 4, and we expect a wave 5 to the upside, then these are the most common targets for, again, a wave 5. And yeah, we are above the 1.618 and also the 0.618, which is another target for wave 5. And it's just not as clean. But then on the lower time frames, if this then is a 1, 2, 3, 4, 5, then this wave 5 is actually the perfect target when you take these fips from the high to the low. So yeah, this might be the end already before then moving to the downside. But yeah, it would be quite a pity to miss out on basically reaching the resistance area and also taking some liquidity and stuff over here. The only way then in this scenario you could touch this area is if we get some sort of an expanded flat where eventually you move to the downside in 3 waves, up in 3 waves, then wave B, target areas over here, before then an impulsive C to the downside. However, if this is the high of a wave X in the bearish scenario, then one would prefer an impulsive structure to the downside in like a 1, 2, 3, 4, 5, and not a corrective way of going to the downside, in my opinion. Then we zoom in a little bit. Then we have the 1, 2, 3, 4, 5, again, ending wave 5 somewhere over here. Might already be finished. And then if we zoom in just a little bit more, I have to work on my counts because some counts look a little bit like one another now. But then if we zoom into the absolute low time frames, then over here you can see this wave 5 ended perfectly at the 1.618, taken from the high of 3 to the low of 4, which is very nice. 3 waves in A, 3 waves in B, as explained earlier, and then we expect a C to the downside. But this is then a corrective structure in this scenario. And if this is a corrective structure and you want to go to targets of 13K, you preferably want to start with some sort of a impulse to the downside instead of this corrective structure. But this at the moment looks more likely because of all the ranging that we had, and also moving wave 5 to somewhere over here just makes it very awkward to count this type of price action. So yeah, that is where we stand at the moment. I hope this video was helpful or valuable to you. Thank you for watching and subscribing. Please let me know if you think this new setup might be an idea. I kind of struggled maybe a little bit with some stuff. But yeah, give me some feedback and I'll see you at my next video. Bye bye.